Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Welcome to Market Matters, live streamed for your viewing pleasure. Every Monday, live on YouTube, on TikTok. We could figure out where to go live as well on other platforms as well. I suppose Instagram, we could try go live there. Sean's joined us in studio again. He's going to be dropping his rap album at the end of this episode, so stick around for that. Sean, thanks for coming through.
You're welcome.
We're going to be taking a look at a couple of things in our Market Matters today. We're going to be taking a look at some issues, mostly that have affected South Africa, or that will continue to affect South Africa in various aspects. We're going to be taking a look at the interest rate decision that we got last week, or lack thereof, depending on how you qualify that. We're going to be looking at the movements on local companies, the likes of ArcelorMittal and Naspers having big moves and making big announcements as well. We're also going to be reflecting on what could potentially be some awkward conversations that have been happening around climate investments as it relates to South Africa and the US. We're going to kick the show off and we're going to see how things are going. Before we do that, I just need to grab something because we're trying new things. We like trying new things on this show.
Where's Jimmy going?
Please don't fall, bro.
Yeah, I'm okay. We're going to try having coffee discussions because these things seemingly take longer, and it's always nice to have coffee.
For sure.
Thank you.
I would say shout out to Starbucks, but no, they're not sponsoring this. This came out of our pockets.
No shout out to Starbucks.
But if they do want to sponsor it, hey guys, we're happy to have a conversation. Let's get straight into it, gents. Let's get into the developments around. I actually don't even know where to start. I suppose let's start with the normal things. Interest rate decisions coming through. US, South Africa, no rate cuts. We built up to this last week. We didn't expect rate cuts. And you almost get the sense that it's like, business as usual. No one cares.
Yeah.
Yeah.
You know what? I think there's just been a flood of information and news and volatility. I know someone in this room doesn't like me talking about Donald Trump, but you know, everything is driven by Uncle Donald, right?
In case anyone's confused out there, it is not anyone sitting at this table.
By the way,
it's our ghost behind the mics. Yeah. So Donald.
look, I think it was strategic from our point of view to hold because we obviously don't know what's going to happen in the future. I mean, we basically in a trade war, or the world is in a trade war, in my opinion. I don't want to call it a potential trade war because
no, we're in it.
We're definitely inside it.
China's throwing back tariffs. Canada's retaliating. We're in it.
Exactly. So as much as our inflation has been steady, there's no need for us to rush. I know it's not good on the consumer side, but we've got to look at it from the largest picture. Like that's how I interpreted what the Reserve Bank was saying or what they did. I was like, okay, good move for now.
Si?
So the US one I get, right? I mean, what Paul was talking is that he is seeing inflation ticking higher in their data and growth down. So be careful. Although was it the Chicago Fed man who said there's still going to be 3 cuts this year, and they better hurry up because it's like, almost
Quarter
April.
one done.
Yeah. Quarter one done.
He's not wrong. At the end of this week, you understand.
No, quarter one done.
Yeah.
Locally, I'm not so sure though. I mean, we have immensely high real interest rates. Our drivers of inflation is not demand driven at all. It is either imported, although that's fading away with oil and the rand at their current levels. It's Eskom, which is going to hit us with 12% or so at the end of quarter one, and the rates don't have any difference for that.
You bring up Eskom, and it's just such a painful.
The fun fact is that Khaleesi, which one of the power stations is finally done. I think 12 years late and 3 times overpriced. They synchronized it last night to the grid.
It might.
Oh, really?
Oh yes, I saw
didn't
that
know
announcement.
that.
Eskom gave us an announcement that they've added 800 megawatts to the grid. You know what? My concern is less around Eskom adding to the grid. And when you look at Eskom's reports, it's around the unplanned outages those equate to almost as much as the electricity being generated. I mean, how do you have more than 10,000 megawatts of unplanned outages or unplanned maintenance or anything unplanned should not be in that amount? You should have some form of control in there, but that's not on this section of Market Matters. That's not the conversation for today. That's a conversation we battle with every day. I want to circle back to Trump for a sec. And that's because it's primarily because the United States has exercised its authority on climate investments. South Africa's been going on a huge climate drive. We know the president has been very vocal around climate investments. Shout out to Jimbo and those that have joined us on our YouTube live stream. We welcome you in the chat. But yes, back to Trump. The investment side of it has been a big thing for our country. We've always said, we're the first country to be part of the just energy transition in terms of investments and rollouts and that whole plan, right?
100%.
Europe has come out last or 2 weeks ago with an announcement that they're committing more than 4 billion, I think it was 4 billion euros to us and all of that. And in the past, we've also secured funds from the likes of the World Bank and the IMF for climate investments. It seems there is a portion of funds that was said to be released by the United States that will catalyze the release of other funds that the US is now delaying. Now, I'm not going to say I'm surprised, and I don't think any of us are really not expecting this. But what I found interesting was they said alongside that, some of the other funds that are supposed to come after that were conditional upon this release.
Exactly.
So now, my question then becomes, if you are a EU or anyone else or any other country or organization that has committed funds subject to this release, and you can see the visible tensions between South Africa and the US, are you now suddenly going to not release funds to us because the US is not? Because that's now the non-release on this side is no longer because of us not meeting climate goals. It's because of political tensions.
Yeah.
Now, as another organization, right, say an IMF or whatever private Asian infrastructure investment bank kind of thing, right? Are you now not going to release your commitment because you're saying, oh, you didn't get that first draft? Or are you going to overlook it and say, you know what? Whatever political stuff is happening there, this was our commitment.
Jimmy, I think that...
The way you said Jimmy, you're just like Jimmy.
No. If we look at, Trump when he came in, I mean, it's when we're speaking about the climate, right? He came in and he came out of that Paris Agreement. He says, look, the United States is coming out of this, et cetera, right? So that's already a sign that, this is his direction outside of, the political landscape that, he's playing around with South Africa. So he was always on that thing. So I think from there, he's making us an example outside of, again, the politics behind it. He's making us an example and saying, okay, guys, I'm not really into climate change without really saying it out loud.
But he has said it out loud, Sean.
Fair enough. Okay, fair enough. So
when the United States withdrew from the Paris Accords and the Paris Agreements, and what's Trump's motto?
Which one?
The
Burn
drilling
it down.
one? No, the other one. The drilling one.
drill,
baby,
some more.
drill.
That's the one. So he's been very vocal that he doesn't care about the climate.
From a EU perspective, right, we cannot, stop sustainability goals because we have
one person in the world decides no.
Has decided against it, right? But when it comes to, the contingency of them bringing in money, I don't know what the T's and C's are.
That's true. You haven't seen the agreements.
At the end of the day, I can, circumvent this and decide, okay, I'm still going to pump money in, but how does it affect me as a nation or as a region? So that's, something I have no answer to, but something I would assume they would look into in order for them to decide whether or not should we forget about what he said. Anyways, we were going to give the funds, the funds are there for them to say, if you guys put in this much, we'll put in X amount, meaning that the X amount is there. So what stops us from,
So I think what stops is that there's probably sort of contracts that now need to be changed. You can't just unilaterally say, well, step whatever hasn't happened, therefore
we're just going to jump.
Carry on.
Yeah. So there's addendums
but I
and
do
amendments.
think, surely I would imagine they do that. They
that
make
sense prevails.
Well, and they adjust accordingly.
Let's move to some developments that we saw last week. I want to leave the ArcelorMittal conversation for last, but I want to look quickly at the Tencent Naspers developments from last week. Tencent comes out, gives us numbers. Numbers are nothing short of impressive considering a challenging gaming environment and all of that and Chinese
in China
regulation.
in general.
And the market chose to ignore all of that and be like, well, Alibaba's spending 50 billion on AI. You guys are not spending any on AI, so therefore we're going to sell off Tencent. Because that's the only thing I could see. There was no other logical reason as to why. I mean, forecasts weren't down significantly to the extent that you could justify that. They announced a massive share buyback. And I suppose the market was like, you're buying back shares instead of plowing it into AI. We're going to sell off. But at the same time, can you blame Tencent?
Look, what I've been seeing this this year in general, and I think we've all observed it, is that markets are not reacting how we expect them to react. Obviously, we cannot predict the markets, right? But there is a general trend. What happens when good news comes out?
Yeah.
What tends to happen is that the share price should go up in the green. I think since the news came out, it's down like 5% this morning, or since last week when the news came out, and I honestly think that, the AI game, right, is what's driving a lot of, let's call it, sentiment in individuals. Because if we look at, we go back to the Magnificent Seven, or Magnificent, that word, Seven, you know what I'm talking about. They really drove the markets positively last year under extreme circumstances of high interest rates, high inflation, etc., etc. But it was AI this, AI this, AI that, right? So if a company comes in, yes, the gaming company, and like you mentioned, Alibaba is coming in, they're investing $50 billion in AI. And you guys, yes, you've had some great results, but how come we're not moving into, let's call it, the future? That's the only way I can make sense of, how the market reacted from a share price perspective, because it's almost, yes, great results, but he's still against the trend, if that makes sense. Just my opinion.
I think you're 100% spot on. And I think it is these days AI. You folks don't remember the days of the dot-com boom, where all you had to do to plow your stock up 100% was add a .com to the end. Or and I forget who it was. Some random business got a website. It was like, maybe, I don't know, Walmart or something. And all the website was a one-pager with a logo and an address for the head office. Like no email address, nothing, just like maybe a telephone number. And stock went up 10%. They added billions in value. And it's like, 25 years later, Walmart is rocking in online, sure. But it was just the hype. And the stocks that didn't have were just completely and absolutely left behind and unloved and uninterested. You had to have something around .com. And I think AI's fit is 25 years later the new thing. I think it serves purposes and places. I think long-term for AI, I think AI is a game changer. I think it's like electricity. It's like internet. It's like personal computers. But think of internet, personal computers, electricity and stuff. Who got the value? Everyone. There's no company which is, well, that's the power company, or that's the computer company, or that's the internet company. And it got, it's now absolutely ubiquitous. It's absolutely everywhere. And I think it's going to be in the same with AI. Microsoft will be a winner, not because of their stake in OpenAI, but because of Azure and the processing that they've got, and so on and so on. And I think it's just going to be that everyone wins. But right now, if you're not AIing, the market's like, you're missing something. So maybe we should add AI to our name of the
going on the wall later. That might actually make it to the wall later on. We're gonna take a look at a couple of things in our wall. We're gonna take a look at some surprises that we might want to put onto the wall that we haven't had the time to necessarily dissect. And AI is one of them. AI, I think, is one of those things where, as you say, Sai, it's been very topical. A lot of the investment goes into that. We're also going to take a look at the likes of multi-choice. And if you're interested to find out what we're dipping into in our deep dive, we are going to be diving into the world of credit scores, understanding your credit score, managing your credit score, and hopefully helping you improve your credit score. We're going to wrap up this segment in a moment. I want to look at ArcelorMittal. They had been having the toughest time for the longest time, to the extent that after many warnings about closing down the long steel business, they took a decision to close down that long steel business. More than 3,000 jobs were going to be impacted. And I think I saw it over the weekend, last week, it was tail end of last week into the weekend, the government bailing out ArcelorMittal. Now, that doesn't happen every day because for those that don't remember, for those that have a bit of a faded memory, fuzzy memory, so to speak, ArcelorMittal used to be the old Iskor. So used to be the old steel company owned by the government, went private, was listed, now kind of going through a bit of
Exxaro and Kumba were part of that too.
Yes. Exxaro and Kumba spun out of the old Iskor into their own.
I remember that listing in the late 80s. I got the newspaper, I cut out my thing, I wrote my name, sent my 1,000 Rand check, got my 1,000 shares for 1 Rand a share, terribly exciting, sold them at 1 Rand 30, like, I don't know, 2 weeks or 3 weeks later. Thought I was the cleverest teenager in all of Pinetown, and well, I should have hung on. That's how we did IPOs in those days.
Wow. You know what? One of these days we're going to dip into the trading world because we all have a bit of trading experience. Sean and I used to work together at a trading company. He still does at Trive. And of course, I still sit on that advisory board. But I want to look at that. I want to look at how things have transitioned from the days of paper trading to now, as you said, with the introduction of AI, you can close your eyes, have an AI bot trade everything for you. Maybe we should do that. We should dip into that. I just want to take a look at what you were saying around ArcelorMittal. You said you bought in at 1 Rand and you sold at 1 Rand 30.
Yeah.
If you had to rebuy in today into ArcelorMittal, you'd get in at 1 Rand 31. So you're not that far off.
Well, no, but also I had Kumba and Exxaro. Remember, it was all three together.
Ah, fair enough.
But
fair
that
enough.
is an intuitive. Actually, it's trading 130. It was the price. But to
What a throwback, right?
yeah. And they would post you a share certificate, and then you'd have to post it to your in the mail. It would like come by
Before CompuShare existed as a company.
Yeah, literally share certificates. It was wild. I think steel is strategic. What we're seeing right now in the steel price is a glut from China, and China is looking at steel as strategic. We've had Donald Trump nix the Nippon Steel trying to buy U.S. steel. Because right now there's a global oversupply of steel, and China's just like, doesn't matter, let's carry on producing. But what if one day there's a global undersupply of steel and we don't make our own? How much trouble? I think there are some things that are of a national imperative, security,
National importance, strategic national reserves.
That type of thing. Okay. It's not, and I think that steel is one of those. Right now, it seems weird, and it's 3,500 jobs, not unimportant. I mean, so on and so on. But I think that one day there won't be a global steel glut, and we need to be able to produce our own just in case.
And we have got the steel. We can do it. I mean, we export steel, we export chrome, we export manganese, we export 100%. So much that we can operate and play in that space. And even if we don't, I think the other thing that you're raising, Sai, around it being a matter of strategic importance is we don't necessarily need to export our steel. We don't have a shortage of infrastructure projects we can put it into. There's an abundance of infrastructure projects we can redirect the steel to. So it's never going to be a situation where South Africa is like, oh, we've got too much steel, we don't know what to do with it. Build more stuff, build more schools, build more roads. It goes into every part of infrastructure. So from our perspective, I agree with you. Strategic national importance. And I can see why the government then steps in and says, we will give you a conditional bailout on the salaries to save jobs and to save salaries for the 12 months. But at the same time, I am of the view that they need to do more around securing the steel sector. Yes. It's not enough to simply say, here, we'll pay for the salaries. Arcelor, go figure it out. Because Arcelor's big problem and the steel sector's big problem hasn't been around the fact that we don't know how to run a business. Yeah. It's been around the fact that the regulation and the policy around...
And ESCOM.
And you know what I mean? So fix those things because those are solely in your purview to resolve for an Arcelor. Because if you had resolved them 12 months ago, you wouldn't need to be bailing out an Arcelor at this point.
Yeah, exactly. There's a point I want to touch on, right? Interesting. So you said Arcelor's 1 Rand. Okay, you bought it for 1 Rand. 2 weeks later, it was 1 Rand 30. It's 2025, right? Cool. Let's call that 30 years later. And it's still R1.30. I wonder what that looks like for a new investor that's watching this show. It doesn't really work like that all the time. I'm just letting you know.
Yeah, no, purely coincidental.
It grows sometimes.
It does. I want to zoom out. So my chart has Arsenal metal all the way back to, so it looked like it was a 1990 listing, which is fair enough. I had left Pinetown by then, fortunately. So I would have been final year at Tech. And it looks like, because I've actually got a price of 10. So maybe it was 10 Rand and it went to 30. Either way.
I've got a price as high as
there's a price
2008, 265 Rand. So to go from 1 Rand to 265 back down to 1 is a completely different conversation. It just so happens that, like you said, Sean, it coincidentally ended up at 1 Rand 30 again today.
Yeah.
265 Rand. That tells you something as well, right? That tells you something about how good things can be, because 265 Rand is peak April, May-ish of 2008. The financial crisis.
But there was an end of the commodity boom, and who was it? Which CEO was it? Exara? Was it Arsenal? Forgot to re-sign the deal with Sishen Iron Ore, and then we had this weird company pop up and grab the rights, which turned out to be the Gupta brothers, and was the first time Imperial Crown Mining suddenly wanted the rights, and it turned out that was the first time we met the Guptas.
Oh, well, for some people that might have been the first time.
It might have been. I forget who it was. It was one of the Troika, and it might not have been Arsenal. It was more likely Exara and their rights into sessionals, but literally just forgot.
Yeah,
and then the CEO. Let's not go there.
Let's not go there.
Topic for another day.
A topic for another day. Before I let you go, Sean, how was your coffee? Because we were talking about it before we went into the conversation. I think I got you on with a normal milk. We're having a raging debate about normal milk, alternative milks, and how you get there in between. And we learned something. The nice thing about the show is we're always learning new things. We learned the process of going from normal milk to lactose-free milk.
Distillation.
See, aren't you happy?
Like whiskey.
Must be relatable. See, have to understand it.
Who's James?
Yeah, I was going to ask him who James is.
So James is a funny story, right? We've got a James in our community, but what happens with James is typically when I go into a store and I place an order, especially a Starbucks where you have to kind of give your name to something, I say Jimmy. And the variations that come out from the people that are listening, Yimmy, Timmy, Limmy, no one ever, very few people actually just hear the Jimmy. Yeah. And then when you hear it, they're like, how do we spell it? How do we, you know what I mean? And I've just found it easier and I tried it once. Instead of saying Jimmy, I was just like, James. And then they wrote James on the cup because everybody can hear and understand and Jimmy's not really difficult to enunciate. The same amount of letters, starts with the same letter, ends with a different letter. But I then realized that sometimes it's easier to just use that. It's not my official name. It has nothing to do with me. It's not even on my birth certificate. It's just easier for me to have a conversation with the person on the other side of the counter and not have to explain to them. Next week, I'll try a new name. Next week, I'll be Simon.
So the trick is I would forget what name I've said.
I go with the easiest names to write down, easiest names to pronounce, easiest names to remember. Because also, the more complicated a name you give, if I had to give Sean, and your name isn't complicated at all, but there's so many different variations
of how you spell
exactly.
it.
So are you going to write SEAN on a cup, SHAUN, SHAWN? What happens? So to avoid confusing the person on the other side, it's just a courtesy from my side to say, just write James on the cup because you have to write a name on the cup. But what I will be trying, now that we've brought up James, is I'm going to be trying a bunch of different names. Please let me know in the comments, jump into our chats, jump into our socials. Let me know what names you'd like me to try out on our coffee cups and see how they react. I'll give you some feedback. I'll let you know which names are complicated to pronounce, which names are easier to write down, and which names just are a no-go. There's some people where you give the name and the lady or the gentleman on the other side just looks at you with a marker in their hand and just shakes their head. they draw a smiley face, shake their head, and move on.
You know what? It's okay.
That's it, right? So thanks, folks, for tuning in. Sean, thanks for jumping on with us. Thanks for joining us. Thanks to Trive. They are our partners, allowing us to continue continue to bring you some of the good work that we hope to do. Until next time, that's been Market Matters.
Thank you.